What's up, investors? It's the one and only, as always, the Russian dude of YouTube, and welcome to another Friday and another episode of Communistic Capitalism or Capitalistic Communism. By the way, let me know in the comments what do you think it should be, Communistic Capitalism or Capitalistic Communism? Because as for now, these four words it seems a little bit too long, but we'll see how it goes, so just let me know what you prefer. Welcome to another Friday. Today we're gonna talk about whatever we did not have time to talk about last Friday. If you remember me, and thank you so much, Pete. Thank you so much, Pete Griswold, for joining again. It is just incredible. Like I extremely like to see you in the comments. So welcome. We're just waiting now for Mr. Araya and Gabriel to be our full 3-set investing buddies. And everyone else who joined, thank you so much also for joining. You can identify yourself in the comments, and we're gonna build this small investing buddies community. So just let me tell you a little bit what's gonna be happening around in this stream really quick, and then I will get back to these comments that you're writing in the comment section. Once again, last week we were talking about my new portfolio purchases. Because for those of you who do not know maybe yet, every week, every first week of each month, I'm spending money to buy some stocks. So the last purchase was around like September 7th, somewhere around this day, like more than a week ago, like 10 days ago approximately, okay? And at this time I was buying lots of stocks because I sold also one of my two biggest positions. Like let's say so number 1 biggest position and like number 4, number 5 biggest position. So this gave me additional money. And total it was around $10,000-12,000 to spend on stocks on the stock market. Last stream we started talking about which companies I bought, but unfortunately I had to go, like really it was a really urgent thing to do last week, so we did not have time to finish last week's stream. And today I will go once again really quick about companies that I bought and I told you about last week, for those of you who just joined and who hasn't seen my last week's stream. And then I will spend more time of this stream going through new positions, explaining why I bought them, how much money I spent on them, and all this kind of stuff. Okay, Pete Griswold says that my friend is work as a liberal in Canada. I was singing the Russian anthem to him and he never understood the joke. Sorry, no politics, my bad. 10,000 we know. Yes. Politics, like it's not that it's extremely prohibited topic on this channel, but yes, there are some things that it's better to avoid talking about, because every single person has his or her own opinion about these things, such as politics, religion, and clothes, I think was the last third thing, and money. But we are investing finance, personal finance related channel, so of course we have to talk about money. But I'm not gonna be like, buy this, sell this. If you're not buying this, you're stupid. If you're buying this, you're genius. Nothing like this. This is just all my own very own perspective about the stock market, personal finances, all kinds of these things, cryptocurrencies, real estate, and all these kind of things that I will be talking in the future. But yes. Okay, so last week, just to sum up once again, let's go over, and I'm gonna start screen sharing. This is my working spreadsheet that I'm using every month to see which companies I should buy, which companies should I sell. This was from the previous, the beginning of this month, and this is just a recap of the last week's stream. Green companies are those that I bought last time, red are the ones that I sold last time. So I deposited around $3,000 last 2 weeks ago in my brokerage account, and because I sold ARK Innovation ETF, which, long story short, I just do not agree with the ideology of Cathy Woods, Chief Investment Officer of ARK Invest, because she's like saying Tesla is $3,000 company, $3,000 stock company, okay? And then during this week, she's selling almost $300 million worth of Tesla stocks at $750 each, no, approximately, plus minus a couple of dollars, okay? So why would you sell Tesla at $750 if you believe that this is a $3,000 stock? Why don't you just buy more? Or for example, investing in Palantir, the company that's absolutely unprofitable since the beginning, even before it became publicly traded company. The company which CEO compensation is higher than the total revenue of the whole company. And she's investing in this company as well. Instead of buying like something good company, she's buying Robinhood, which is 80% of Robinhood revenues coming from payment for order flow payments that it gets from its market makers like Citadel and stuff like this. which is basically there are a lot of debates right now in the SEC whether to ban or not this payment for order flow practice, which means if it gets banned, we don't know, but if it gets banned, Robinhood loses 80% of its revenue, and the rest, like 15% of revenue of the last report it was majority of this because of Dogecoin trading, which is not popular at all anymore. So theoretically speaking, at this very moment, Robinhood is already down around 10-15% on its revenue just because Dogecoin is not that popular anymore. And so we're gonna see what's gonna happen in the future. So it's not about that I do not believe in innovations. This ARK ETF is all about the innovative companies, innovations, future, and all this kind of stuff. It's not that I don't believe in this kind of stuff. Of course, innovations, every single person kind of thinking about what's gonna future look like. There are so many people who try to make these ideas bring to life. So yes, innovations will always be happening. Every year, 1,000, 2,000, 5,000, 10,000 years from now, people will still be innovating. And no, of course, I believe that innovations is the future. I just do not believe with the ideology, with the methods of the Cathie Woods. This was the first position that I sold. It was a big one. I got like around 10% profit on this position. Not that much, but at least I got my money back and a little bit on top. And so I sold it completely. It gave me approximately like 8,000 Canadian dollars because all the prices that you're seeing right here, all of these prices are in US dollars. And the second one, I sold Renewable Energy Group, which was approximately also like 1,700 US dollars, which is approximately, I don't know, like 2,000, 2,300, 2,500 Canadian dollars, approximately, okay? This is the biodiesel company, and biodiesel company, I was like, okay, I was trying to predict what's going to be the energy of the future. Biodiesel, like, yeah, it might be, but then I started making more research, and I think that it's less and less chances that biodiesel is going to be the energy of the future. That's why I sold it, and I replaced these two companies, I mean ETF and a company, I replaced with some other positions I'm going to show you right now really quick. Okay. Pete Griswold says Tesla is complicated. Yes, this is just, to say the least, trying to be very respectful, trying to be very respectful to the person who likes Tesla. It is, yes, to say the least, Tesla is complicated, which we know that it's far from being the best investment in the world, but every person, once again, has his or her own opinion about things, so not going to debate this, unfortunately, for now. Okay. Pete Griswold thought that Michael Burry move. Yes, Michael Burry also doesn't believe in Tesla. I am not believing in Tesla just because of him. I did my own research. It might be not enough research because, you know, whenever you're arguing with Tesla fanboy, he or she always finds the reason why to say Tesla is not just a car company. Tesla is doing this. Tesla is sending people to the space. Tesla is building solar panels. Tesla is this. Tesla is the world company. Tesla is going to be a $500 trillion company. You don't understand this. If Tesla will keep growing at 50% annual growth rate, and 50 years from now every person on the planet will have 10 Tesla cars, you don't understand this. So you cannot argue with Tesla fanboys. They will always find all the reasons to prove that you're wrong and why Tesla is such a great company. Because so many people came on the market like in the last 1 year or two, 1 year and a half, let's say in the last, 18 months, so many people came to the market. And what they saw is this exponential, unstoppable growth of Tesla. They have not experienced like 70, 80% share price drops. They have not experienced this. So they see that Tesla always goes up. And they're like, yes, this is a great company because the stock is always going up. And when you're so convicted about that Tesla is such a great company, prices always goes up, you only pay attention to the good things. You try to ignore bad things. The opposite is true, obviously. Whenever you don't like stock so much, you always try to find bad things about the company and you try to ignore good things about the company. I'm trying to keep my mind open to everything. For example, 6 months ago approximately, I was not saying that I hated cryptocurrencies or Bitcoin, but I was like, this is just a gamble, this is like whatever it is, like how can you invest in like something that was just created on the internet, like in the piece of code, in the piece of coding. But I was not like, that's it, I will never invest in Bitcoin. I kept my mind open, and whenever time was passing, I was learning more and more and more things about cryptocurrencies, Bitcoin, Ethereum, and all the other Cardano. I was like I was getting more convicted that yes, there is something cool about this, to say the least. And still, right now, I'm trying to find bad things about Bitcoin, Ethereum, cryptocurrencies, because once again, I'm keeping my mind open, because I understand that Bitcoin cannot be valued at $1 quadrillion like 10 years from now. Like some people predict every Bitcoin is going to be worth $1 million, like, or something like this crazy, for example, okay? I try to find something that says that why cryptocurrencies are bad. Sometimes I find things like this, sometimes I don't, but I keep my mind open. Tesla might be a good company. Yes, it is a good company, but it definitely is not worth what it is worth right now. Like, if you take, I know, once again, if some of you are watching are Tesla fanboys, like, I'm gonna be offending you and stuff like this, but and I know that, yes, Tesla is not just a car company. But long story short, if you take all the major car manufacturers, Toyota, Volkswagen, Mercedes, BMW, combine them all these cars that you see everywhere in the world, in every single country in the world, the market capitalization of these companies is less than just one Tesla. And these companies, I'm talking combined. You're driving on the roads, you're gonna see Teslas mainly like first world countries. USA, Canada, Europe, like Norway specifically, but you're not gonna see it like everywhere. You're driving on the road and you're driving from your home, let's say, so to like, I don't know, like your work, you're gonna see 20 Volkswagens, 20 Mercedeses, 10 different Audis, and you're gonna maybe see just like 1-2 Tesla. So, and once again, the major argument of Tesla fanboys is like, Tesla's not just a car company, you don't understand. You understand nothing. Go invest in S&P 500. So, long story short, yes, Tesla is a great company, but it's definitely not even close to be worth what it is worth right now. I do not have like major research about these companies or anything like this. I put price alert for Tesla like around $300. I know it's never gonna reach there. Maybe yes, maybe no. I just put price alert at $300 for Tesla. If it goes this low, which is like more than twice lower than it is right now, I might consider buying like, I don't know, like a couple of shares or something like this, just to experience what's the fuss about. But I'm definitely not even close to be buying at this very moment, because at this very moment, this is like, I think, 7th biggest company in the US. If I'm not mistaken, it's definitely top 10, which is once again pretty overvalued to say the least. Okay. So many comments from Pete Griswold, so let's see what my investing buddy is typing, and we're still waiting for Mr. Araya and Gabriel. So, though, okay, shout out to my stock portfolio app, which is well simple, I'm assuming, yes. True, that's why, and hate Tesla, so much expenses, but love Tesla at the same time. Yes, I like Tesla. Elon Musk is a cool guy, meme lord and all this kind of stuff, funny guy, very huge innovator and everything like this, but stock is just so much overvalued. Like what is the P ratio, like what, 300 or like 100, it's like triple digits, like you cannot justify this very moment. Like companies cannot grow at 50% rate forever. Tesla was growing 50% maybe 2 years ago, 1 year ago, like last quarter maybe the growth was like 20% or something like this, but it's not going to be like this forever. Tesla will never be $10 trillion company in the next 2-3 years, like maybe some analysts predicting. Feeling have nothing to do with this except Green Lane Renewables. Green Lane Renewables is the meme of this stream, looks like already. By the way, let's see how is the Green Lane Renewables are doing. Green Lane Renewables stock, oh my god, Pete Griswold, I'm so sorry, minus 5% just today, but in the 5-day period it is minus 6% and the last month minus 9%. But this is a very relatively cheap stock, so it's not that much liquid, I'm assuming, yes. I guess it does not show the, how it's called, like trading volumes in this very basic Google search or whatever. But yes, if you once again convicted, if you think that this is a very cool company, if you are sure about this, I'm not gonna say you sell it, I'm not gonna say you buy more. If you really like it, if you did your own research, feel free to hold it. These are the stocks that might go like 200% up, and at the same time they might go like 90% down. So this is what I think you even mentioned, that this is the money that you invested in this company, or like your play money, the money that you can afford losing just in case. So just keep it as it is. Okay, except Tesla just needs Tesla dealerships for repairs. I think Tesla somewhere has dealerships. It's not that popular like all the other car manufacturers like Volkswagen, Mercedes, but I think Tesla does has dealerships. And the good thing about Tesla, by the way, is that it does not require that much maintenance as regular cars. For example, Tesla does not need oil changes. Every single 10,000 kilometers, 10,000 miles, Tesla does not need oil changes. Tesla does not have that much moving parts because it simply does not have engine. It has this big battery. It has like engines that are responsible for obviously wheels spinning, but it's not the same engine that you see in the gas or diesel car. It's not thousands of moving parts and each one of them breaks, and it's very complicated $1,000 repair of the whole engine sometimes in some cases. Tesla, in this case, one of the good things about Tesla, it does not have too much expensive repairs. Okay, the only reason I don't like Tesla. Now this is chill, I bought way lower lows. So perfect. So if you bought it, Greenland Renewables way cheaper than it is right now, it works for me absolutely perfect. I'm more than happy for you, Pete. And then they just got a new RNG deal for $3 million in California for farming renewable operational in 2022. You see, you're already way more involved in this stock than me. So I'm definitely not the one who is gonna teach you stuff about this stock. I'm not following it as closely as you. And if you see that you are doing your research, this can very well be one of these 10x stocks someday in the future. And once again, I'll be extremely happy if this actually happens, Pete. Okay, so now really quick, don't apologize. Apologize for nothing on this stream, Pete. You're always welcome. You're the one who brings the conversations, brings these arguments, brings all these cool things that we're discussing during this stream. So you, Mr. Araya and Gabriel are always welcome, and you should never apologize for anything on this stream. Okay, so coming back to my portfolio. ARK ETF, which I sold. I like you checking it out. Okay, so my portfolio, I sold ARK, and this is just a recap of the last week once again. I think last week I covered 4 positions or something like this, like ESG ETF, Chinese ETF, clean energy ETF, and I think that's it. So just once again, really quick. The first company that I replaced my ARK ETF with was the SUSA ETF, which is the ETF for ESG companies. And this is, as you can see, it's exactly following the same trend as the S&P 500. So if we open here VOO, which is basically a S&P 500 ETF, okay, so what was this here 1 year? Okay, so if you can see it right here, these ETFs are almost exactly the same, like in terms of percentage, okay, where is it? In terms of percentage, in terms of the graph, as you can see, it just goes up, because you remember the main principle of investing, stocks only go up. This is out of discussion. So as you can see, it's literally you put the line, you put the this, whatever thing you're calling it in English, and it just grows up because people will just always buy the dip. So many new people on the market, all they know, most of them know, buy the dip, buy the dip, buy the dip. The market goes down 1, 2, 3%, immediately people buy the dip. 2% more, buy the dip. We're gonna see what happens when the market drops 5, 10%, or it starts dropping 2-3% 2 days in a row. Then we're gonna see if something changes. But as for now, more than a year, I think the S&P 500 hasn't dropped more than 5% for more than a year already. So, and this ETF is basically, once again, it has ESG companies, and ESG means environmental, social, and governance, which are the companies that recycle, they promote equal work opportunities for everyone, for all the races and genders, they promote transparency and financial reporting and all this kind of stuff. So ESG companies are, let's say, so good companies. And this ETF, as you can see, it goes exactly as S&P 500, and this ETF has companies like Microsoft, Apple, Google, Nvidia, Home Depot, BlackRock, Tesla, fortunately or unfortunately, Texas Instruments, 3M, Johnson & Johnson, and 188 more companies. So it's almost 200 companies. If you want to think about it like this, it's almost 200 best companies from the S&P 500. So this was my first purchase, and as you can see, it just goes up, but the market drops, this ETF will drop almost exactly the same. Okay, the next one I replaced my ARK ETF was Chinese Internet ETF, which is this China and the ticker is this KWEB. So I bought this approximately, like I said, in the September. So I bought it approximately right here, and this let me even see, September 7 or 8, so somewhere around here. Obviously I bought it at the very peak, as I always like to do, but this is also very speculative play. As you can see right here, the price of this ETF is more than 50% from its all-time highs. This is a very risky play, but it only has approximately 1-2% of my portfolio. So even though it is very risky, it has a very big potential, because investing everything is high risk, high reward. And these are internet related companies in China. And these are the equivalents of Chinese Google, Chinese Amazon, Chinese like all this kind of stuff, okay? Baidu, JD.com, Alibaba, and these are just a few companies, and I'll show you which exactly companies, at least top 10 holdings in a minute. Okay, so the companies went down so much, even though the fundamentals of these companies are so great. If I spend time right now going through fundamentals of each and every single one of them, it's gonna take 3 hours. So just trust me, and if you want, you can do it yourself. But just go and check like income statements, balance sheets, cash flow statements. Everything is way better than on the stock market in the US. All the multipliers are in mostly single digits. Like right now, the average, the mean average S&P 500 PE ratio is like around 20 plus. Maybe even 30 already, okay? But in these Chinese internet companies, like there's like 9, 10, 11, 12. So these are pretty undervalued companies, which means that these companies already corrected significantly, like I said, 50% from its all-time highs. And yes, they might go even lower. If the US stock market crashes, this will go even lower, but that's why it's purely speculative play, high risk, high reward. But if Chinese ETF starts recovering, or whenever the whole world starts recovering, I really believe that these are the companies that will be exploding so much. So high risk, high reward once again. This is the equivalent, let's say, so how it's called, like Amazon, everyone likes Amazon. Right now, Amazon PE ratio, and let's even check it right now, okay? So Amazon PE ratio, and this might be not the best example because the stocks are extremely expensive for Amazon. This is like thousands of dollars, like $3,000 or something like this. Yes, $3,500, okay? And the PE ratio of Amazon is around 60, okay? The equivalent of Amazon in China, like I said already, is Alibaba. And the PE ratio of Alibaba is, let's say so 20. So it's 3 times less. Imagine right now Amazon is 3,500. Imagine seeing Amazon 3 times less expensive than it is right now. So imagine Amazon is not 3,500. Imagine Amazon is 1,150 right now. Wouldn't you want to buy it, knowing that it is so much more undervalued than it used to be? Then it's 3 times cheaper than it used to be. So that's what I'm talking about. So all these Chinese companies are extremely attractive. Once again, high risk, high reward. Okay, let's see. Pete is asking something again as always. And Pete says, is buying 20 stock at $500 worth it? Is buying 100 shares at $100 worth it? It does not matter. The price of a stock does not matter. The price of a stock, it can be 3,500, like I said, and it can be $50. All it matters why the price of the stock is so high or so low is because of the number of shares outstanding. For example, company can issue stocks from the IPO, let's say so 1 billion shares. And each share costs like $100. And this is the company that has already market capitalization of 100 multiplied by 1 billion shares of $100 billion. But the same company might, not the same, but another company might do IPO and only issue, let's say so 10 million shares. But the price will be already like what? What was the original price I said? 1 billion shares and $100, but the second company is doing IPO and it only has 10 million shares, but the price per share is $10,000, I think, if my math is correct. If we multiply this, it will be the same $100 billion. So the price of a stock does not matter. What matters is the number of shares outstanding. The companies might be exactly the same in terms of market capitalization, but one company might have 5 times less shares outstanding, which means that the price will be 5 times more than the company that will have 5 times more shares outstanding, but the price will be 5 times less than the first original company. So price of a stock, it does not matter. What matters is the fundamentals of a company, income statement, balance sheet, cash flow statement, the company past, present and future, management expertise, and all these kind of things. Okay, so takes money to make money. Exactly. I normally play normal, fine on easy. Alibaba was nice 3 years ago. Alibaba was nice 3 years ago, it is nice right now. If Chinese government does not do stupid things, and I hope I'm not getting banned or cancelled by Chinese government for saying this, but long story short, yes, if Alibaba, if all these things that are happening right now in China, they start to be normal, and there's no huge or crazy control over things like this, we might see Chinese internet ETF skyrocketing. And I'm not saying this financial advice or anything, always do your own research, obviously, as always, but long story short, this potentially is a very good play in long-term perspective, but high risk, high reward. Okay, the next one, and yes, this is the companies that in this Chinese ETF are. So in this company are Tencent, Alibaba, JD.com, Pinduoduo, Meituan, Fulltrack, ADR, and all these kind of companies. All you can see is just type like KWEB or Chinese ETF, Chinese Internet ETF, and you'll be able to see all the holdings. And these are just obviously top 10 holdings. They have way more than this. Okay, so next company, I thought I was saying that it was renewable energy. I don't believe in biodiesel, and what I did, I just invested in the whole clean energy ETF. So instead of trying to guess what's going to be the energy of the future, I just bought ETF that has almost all of them: wind, electricity, hydrogen, biodiesel, and all this kind of stuff. As you can see, it is very good seeing graphs like this when you're buying, because from its all-time highs, this ETF is down 32%. And I bought it approximately like here. So yes, I'm still down like 3%, but in bigger perspective, if you zoom out, I bought it approximately only here. So I bought it with, let's say, so how much? I bought it with almost 30% discount. And this is basically I'm bought, and this is the ETF for all the renewable energy, clean energy, green energy companies, which are, once again, I'm gonna show you all these companies, at least top 10 holdings. These are Vestas, Ørsted, Enphase, Nextera Energy, Excel Energy, SolarEdge, and all these other companies that you see right here. Plug Power, which is a little bit more famous. And besides just having US companies, and by the way, yes, this is the sector: electric utilities, renewable energy, heavy electric equipment, semiconductors, electric components, semiconductors, oil, gas, and all this kind of stuff. And this, let me see if I can find it. It's not just US companies. What's the good thing about this? It's not just US companies. The second biggest region of this ETF, yes, here is the geography. The second biggest region is Denmark. It also has China, Canada, Spain, Portugal, Italy, and so on. So it's not just diversification across different types of clean energy, it's also diversification across different regions, which I like. You need to be diversified, not just across sectors, but also across different regions. Okay, okay, this was my replacement companies, and I think this was everything. This was when I finished last time. I don't remember too much already about last stream, but I think this is where I finished. So these are my new purchases, brand new companies in my portfolio. The first one was Silvergate Capital. I think now I'm remembering that I think I was talking about this, okay? So this company is 33% down from its all-time highs, which is once again very good to buy companies like this. I did not have this company at the all-time high prices. I bought it only approximately here. So right now I'm like down 6% approximately on this position, but still I bought it with 30% discount from its all-time highs. And what this company is doing, this is a bank, this is even if you want to think about it like this is branch of major bigger bank, because there is another bank which is called Silvergate, basically bank, and they have this Silvergate Capital, let's say so, division, okay? And what they're doing, they're mainly focusing on cryptocurrencies. And the biggest clients of this Silvergate Capital are major crypto exchanges: Binance, Coinbase, Gemini, and so on and so forth, okay? The thing about this bank is, for example, whenever you're just buying cryptocurrencies yourself or without using this bank, in order to buy cryptocurrency, you need to wait. If you're buying Bitcoin, it takes maybe 10-15 minutes for your transaction to be approved on the blockchain, and then money, Bitcoin, enters your wallet, and then you just basically access Bitcoin, okay? But what this bank does, it allows these transactions to be immediate. This bank has money and cryptocurrencies on its balance, let's say so. Whenever you're buying, let's say so, Bitcoin, you give money to the bank, and then bank gives you Bitcoin immediately, and then bank waits itself for the transaction to be approved by the blockchain, and then it receives Bitcoin. But you have immediate access to your cryptocurrencies. which makes trading, like, because trading sometimes it's all about seconds, minutes, sometimes it's a very time sensitive thing, especially with cryptocurrencies. They're like up 10% one day, down 20% the next day. So obviously waiting for 30 minutes can cost sometimes millions of dollars if you're a very big institutional investor. So, and because this is literally a bank that does not have alternative right now, it's literally a monopoly in this case of cryptocurrency banking. These clients of this bank, which once again big crypto exchanges, the bank does not pay them interest rates, it does not pay them interest for holding their money, because, you know, one of the biggest expenses of banks is whenever you give bank your money and put it on the savings account, then you receive like 0.05% every year in savings interest rates. And this bank does not pay this, because right now it's using its monopoly to its advantage, and because these clients of this bank does not have any other choice. This is literally just one of its kind type of business idea, let's say, so if we want to call it like this. So this bank is doing that like this. It does not have one of these major expenses, and if you want to also take a look at its financials, revenue always goes up. Let's even take a look at this, because this is one of my favorite companies recently, and since it's the new company, I think we have some time to talk about this company in more details. Okay, Silvergate Capital, at this today it's only down 0.04%. Okay, financials. Obviously Yahoo Finance is always slow, but whatever. As you can see, $44 million in revenue 2017, then 75, then 79, then 88. Basically every year revenue only goes up. Net income 7 million, 22 million, 24 million, 26 million. Not a single year where this bank has decline in revenue or decline in income. Let's see quarterly. Quarterly is the same: 21 million, 22 million, 26, 30, 41. Revenue only goes up. Net income 5, 7, 9, 12, 20 million dollars. It never goes down. It always goes up, like stocks, because stocks, once again, stocks only go up. Balance sheet. Yes, banks, they have very big leverage, because this is whenever you give bank your money, it becomes liability, because you need to pay interest on this. Like I told you, you give $1,000 to the bank and put it on savings account, and bank treats this $1,000 as liability, because it has to pay interest on this $1,000. But if you open these liabilities, total deposits, interest, and if you can see, from total deposits, which are, let's say, so $5 billion in the last year, only $100 million are interest-bearing deposits, and $5 billion, which is like what, 90%, maybe even more, like 95%, is the non-interest-bearing deposit. Exactly what I told you. This bank does not pay interest on its deposits, which is extremely good, because this is one of the biggest expenses that every bank has. Cash flow statement. It was negative because, once again, banks, they're a little bit unusual, they're a little bit irregular from other companies, so this is not where you look at. But the rest, I don't know how to comment this basically, but as you can see, it's not as bad. And here you can see all these projections from the investment analysts. It's always beating all the EPS estimations, always beating them. You go here, once again, revenue, earnings, everything goes up, quarterly, everything goes up. So long story short, this is a good company. Statistics shows it's a little bit overvalued. It's 49 PE ratio, but it's nothing crazy like Tesla of 300, or like price to sales 24, but once again, banks are a little bit different from regular companies. It does not pay dividends, and this is why I have it in my third portfolio, which is personal portfolio where I don't want companies to be having dividend paying companies. Okay, so this was my first purchase, brand new purchase of the last week. Another one was EOG Resources. I bought it in replacement of Renewable Energy Group, which was Biodiesel. I replaced Renewable Energy with iClean ETF, which is the ETF for green energy, for clean sources of energy and all this kind of stuff. But I still believe that we cannot just get rid of oil completely. And this is the company EOG Resources. This is the oil exploration, let's say so, company. It's not directly like Exxon or Chevron. It's not directly involved in oil, but what's involved in it's exploration mainly. So it is still oil company, but not 100% related oil company. So I bought this company. I had this in the past. But then I sold it because I wanted to completely get rid of oil-related companies, because I thought that, okay, world was gonna be oil-free in 2 years or like 5 years. It's not gonna happen. Oil is gonna be used no matter how much all people protesting oil or like climate change and all these kind of things, which are obviously real and it's a very big concern. But no matter how much people protest it, we will not get rid of oil in the nearest future. This is like 100%. For this reason, I decided to still keep a little bit exposure to oil in my portfolio. Once again, it's only like 1-2% of my total portfolio in this company. I bought this, as you can see, from all-time highs in the last 6 months. It is approximately trading with like 20%. Yes, I bought it on September 7, and I bought it with approximately 20, almost 23% discount. Since then, it was an incredible run. I'm up almost 10% on this position. As you can see right here, I don't think we'll have time to go through my portfolio today, even though we might. Let's see how it's gonna go. But once again, I just replaced Renewable Energy, which is just one biodiesel company. I replaced it with everything. Non-oil related energy sources and one oil related company. Okay, let's see. Mr. Araya, welcome. Thank you so much for joining, Mr. Araya. We were waiting for you since the beginning. Gabriel is the only one who is left from our investing buddies. So, Pete Griswold says, I like ETFs, but it seems cheap. Like I'm not trying hard enough. Weird. Mr. Rai now says, only have about 8% of my portfolio in ETFs. I probably should increase it. It's not as fun though. Yes, ETFs might not be as fun because it's not like I believe in this one particular company, and if this one company that you believe in actually goes up, you're like, told you guys, this company will be next banger, next gonna be 10x stock. So ETFs are not gonna be like 10x, 20x, 30x. They might be pretty crazy, like giving you like 80, 100% annual returns, but this is not gonna be 900% return companies. But this is, investing is all about protecting the downside instead of trying to increase your upside. So if you see all these like big investors like Ray Dalio, Warren Buffett, they're not just invested in stocks. They have bonds, they have commodities, they have gold and all this kind of stuff. Because the reason why they were able to get 20% annual return for like 40 years, last 40 years, it's because they were protecting themselves when the markets were crashing, and they were more or less a little bit higher than the market when the market was recovering or whenever there was a bull market. All they were focusing on how to protect the downside while trying to get a little bit more of upside than the regular market. Because this is the main thing about investing. Whatever you're doing right now, some YouTubers are doing right now, all they are trying to focus on how much money I can get like in upside, how much money I can get in 1 year. I need to beat the S&P 500 20 times, like I need to get the biggest returns ever. But whenever market crash happens, and once again, remember, majority, more than millions of people came to the stock market in the last 18-20 months. These people have not seen yet big even corrections, because I told you once again, more than a year the market hasn't corrected even 5%. So these people hasn't even seen correction. I'm not even talking about crash or recession. So that's why they're like, hey, here's my 30% annual return. Hey, here's my 80% annual return. Hey, like I'm making so much money. Like you are fool if you're just investing in ETF for S&P 500. These people haven't seen corrections. When all these like 30% annual returns, these are, if you're just like technology, if you're just innovations, if you're like very poorly diversified, 80% in the same sector, and if it's like technological sector, for example, this is the sector that might drop the most, because the sectors that are overvalued the most, they will be the ones to drop the most, because obviously people will be trying to lock in their profits as much as possible. Okay, so once again, Pete says, my Ethereum ETF is doing on par here. Love Vitalik and Q1 of 2022. Yes, Vitalik is just what, the youngest crypto billionaire in the world. Crazy guy. It's incredible how he even came up with all this like stuff. Just crazy. Safety first. Exactly, Mr. Rice. Safety first. All you need to care on the stock market in long-term perspective is safety first. Protect the downside. Do not chase high returns. Like you might get 1 year 30% return, next year is going to be 15% return, but then when the market crashes 20%, you're going to crash like 50%. And all your return for the last 3 years, and you're going to be below the market performance of this 3 years average return basically. YouTubers and Twitchers are doing pump and dump scams and hurting the market by giving it a bad name. I partially agree with this. Yes, there is a thing about this. If you put like next stocks to buy in September 2021, best stocks to buy in October 2021, stuff like this, next 10x stock, blah blah blah. Yes, there is truth about this, that some of them they try to pump or something like this, but I still believe that as retail investors, we do not have that much power in like this big stock movements. Yes, we all heard about Reddit, like GameStop, AMC and all this kind of stuff, but this was something like really massive. This was millions of users buying the same stock, while the stock was overly short sold. So this is why it happened short squeeze, when basically short sellers had to cover their positions. And I do have a video about what is a short squeeze, by the way. So after this stream, if you do not know what is a short squeeze, go ahead and watch it. I'm explaining it perfectly and easy as always. I think like in 2-3 minutes I'm explaining what is a short squeeze. So in this case, yes, but when you're just a regular YouTuber with like 100,000 views, let's say, so YouTuber is saying, let's buy all, I don't know, like Tesla, for example, 10 years ago, okay? And this video has 200,000 views. Maybe maximum 5% of people will do it, which is like, for 5% of 200,000 is like what, 1/20th, it's going to be like 10,000 people, if I'm not mistaken, okay? If 10,000 people buy Tesla stock, even if it's going to be $1,000 each, so it's like what, it's not going to be too much. It's going to be just several $1 million worth of Tesla stock. It's not going to be even enough to move the market. So yeah, they might try to do it, but long story short, in most cases they are not able to move the market that much. Okay, Mr. Araya says, how long have you been investing? I only started 3.25 months ago. I've been investing, officially investing, for like approximately like since May 2020. Yes, since May 2020. I wanted to start earlier, but I think my very first video on YouTube is explaining my history, and I will make more professional video later. I could not, unfortunately, start investing earlier, but to be honest, it was fortunate that I was not able to start earlier, because if I started investing earlier, I will have this crash of 2020 because of the virus, and I will eradicate all the results for the last 3 years, because I think that the lowest point of 2020, let's even check it right now really quick. VOO, okay, so if we put it 2 years, so this was the crash, okay, in the very bottom of 2020 crash, S&P 500 VOO was $210. The same it was in approximately February 2017. So basically what I'm showing here, the lowest point of 2020 crash was the same as 3 years ago. So if I started investing at that time, I would have lost 3 years of progress. But why I couldn't start investing earlier? I have bachelor's in economics, so I started learning economics and investing and financing when I was like 18. Right now I'm 28, so I'm in this world of investing for 10 years. But unfortunately, I'm only investing for almost 2 years so far. So I could not start investing because first I moved to USA and I was a student on student visa. I could not start investing because I needed social security number, which I did not have. I was just a student. So I couldn't even create my investing account. I was in the US from 2015 until 2019. 4 years I could not start investing. Then I came to Canada in 2019, and then basically like what? Less than a year later, like 8 months later, after I settled, after I found an apartment, after I found a job and all this kind of stuff, as soon as everything is settled, I opened my investment account. Before this, I was obviously following the stock market, economics, finance, politics, if you want to call it like this. I was following all this. I was in this world since 2011. I just could not start investing because I could not even open an account, unfortunately. Okay, so Face Clan low. Pete Grizzle started about the same time, COVID, right? So you see, even we started around this time when majority of people came to the stock market in the last 18 months. Like I said, even we are one of these millions of people. So I wish I got 3/4 of a year ago. We all wish we started earlier. And I was feeling like, yes. In fact, if you go to my Instagram page, and one of my first posts about which stocks to buy, let's call it like this, it was in March 23rd. I'm gonna even open it right now if I can find it, if we're gonna find time. It's gonna take a lot, right? But my first post which says which stocks to buy, even though now I feel bad about doing this, but it was just an analysis. I was not saying buy this stock, it was just an analysis of cruise line companies. And I made this post on March 23rd. And if you put, once again, S&P 500, it was around this time. It was at the lowest of the lowest at the lowest points. So I wish I started investing at this point. At the very bottom, it didn't happen, so that's okay. Okay, let's get back to investments. Right before the crash, now I'm back with the vengeance. Yeah, you didn't want to invest right there. Lesson learned. Investing on the stock market is all about learning lessons, learning the past. Because those people who do not know the past, they're doomed to repeat it. And those people right now who seriously think that the stock market only goes up, they're unfortunately the ones who will suffer the most, unfortunately. Okay, next company, pure speculative play, Nordic American Tankers. If you've been watching several previous live streams, I was always talking about that price of container shipping is skyrocketing, it's going crazy high. It means that like some shipping, it costs like 10 times more expensive right now to ship materials through the sea. And this is one of the companies that's been almost 80% down since its all-time highs. I invested in this company, it's extremely cheap, $2 company. And I invested like $150, like $200 only in this company, so it's not even a big, it's like less than 1% of my total portfolio. I just invested this as a pure speculative play, just to fool around, because I was waiting for the report of this company. So if the prices for shipping are skyrocketing 20 times and this company is doing shipping and the stock is 80% down, we just need one outstanding financial report for this stock to like 10x, 20x, maybe even 50x, who knows. But it was like $10, almost $11 in its all-time highs in the last 5 years. This is pure speculative play, I'm still holding it, because the report that they gave last time, it was approximately what was expected. So maybe because I was also thinking that the ports were not operating at full capacity, I will give it one more quarter maybe. Originally when I was buying this, I knew that I'm gonna hold it for one, maximum 2 quarters, which is like 3 to 6 months. First report was as expected, so the stock price didn't move almost at all anywhere. But the next report, because now still container shipping prices are still extremely expensive, maybe next report is going to be crazy because ports are reopening, hopefully. We're going to see. I will hold it for another couple of months and then we're going to see what I'm going to do with this company. Okay, so the next company, I bought just 2 shares of this, is the Corsair Gaming. Right now, I think this is my second biggest position in my portfolio, and Corsair Gaming is the company that you might even heard about. This is like computer hardware. Computer RAM, computer like blocks, like cases, I mean computer cases, like keyboards, mouses, like these like things, I don't know how they're called, like for your mouse and all this kind of stuff. And so many friends are using products of Corsair. Back in Russia, so many friends were using Corsair. I was also using Corsair when I was buying RAM, whenever I was building my very own PC, around 2011, I think, let's say so, okay? I was building my very first personal computer at this time. I did not know anything about computer building, so I had my friend, neighbor explain me everything. We were going through different stores, buying cheap, buying the processor in one place, buying the graphics card in another one, buying like a computer case in the third place. Fun times, very cool stuff. And I knew at that time that I specifically want my RAM from Corsair, because I just didn't know why, I just wanted it. Maybe because all my friends are using Corsair RAM, maybe something else, but even if you put right now, best RAM 2022, let's say, so, okay, for the next year. And if you open, I don't know, first website, oh no, it's about another, it's about car RAM, so I need to put best PC RAM. Okay, let's see if it's, no, it's something about some stupid stuff. Okay, best RAM for gaming, okay. Corsair, as you can see, one of the Corsair here, and only one, but you can see here, Corsair, best pick. If you open another one, best RAM for gaming, next website. Team Extreme, never heard about this company, again, Corsair, okay. Next, third one, G-Skill. The next one, Colorful, I guess it's all the other, oh, G-Skill, by the way, second one. If you open another one, I don't know, like, best RAM for gaming 2021, okay? it feels like it's the same website, but different stuff. No, oh yes, again, Corsair, as you can see, and this is just RAM. This is no even keyboards, not like mouses, nothing like this. This is we're just talking about RAMs. In every single article about best RAM 2021, 2022, you will find at least one of Corsair RAMs. And once again, here in Canada, my friend built his PC recently. He is using Corsair case, Corsair RAM, Corsair other components of computer. So this is the company that just IPO'd a little bit more than a year ago. And it's been pretty stagnant. So if you put it like this, since the beginning, since IPO, it's up 67%. But in the last, March 2021, it is down 9%. But as you can see, I don't know, like let's put 6 months. It's relatively flat. It goes up and down, yes, but it's relatively flat. It's nothing crazy. So, and I was just buying almost every single month. I was buying a little bit of Corsair, and I just did exactly the same this month. The company is perfect from fundamental, like because people are using this product. I'm using it personally. And one of the good things about investing is to invest in companies that you personally use, by the way. And from fundamentals as well, if you open the, let's even do it right now, open the Yahoo Finance once again, just really quick, going through fundamentals of Corsair Gaming. So if you open Corsair Gaming here right now, then you go to financials, okay? A little bit slow, but okay. Okay, once again, you remember Silvergate Capital, everything goes up. Corsair, once again, 937 million, 1 billion, 1.7 billion, operating income, 21 million, 23 billion, 158 million, net income, negative 13 million, negative 8 million, and now they're finally profitable, and they're $103 million profitable. Balance sheet, technological companies are known for being heavily leveraged, but this company, look at this. It's not that much leveraged. It's like, it is more leveraged. It's like what it's been leveraged like 4x here, let's say, so 4x here, and here is approximately already less than 2x leverage. So it means that decreasing its leverage, which is good, but I'm not expecting them to get rid of liabilities completely, because once again, this is a technological company, which means that this company needs borrowed capital to do research and development, marketing, and all this kind of stuff. Additionally, why it is good right now to be a leveraged company? Because right now interest rates are so low, which means borrowing money right now is extremely cheap. So right now being leveraged does not mean too much bad stuff at all. And as you can see, they're a little bit deleveraging, even 886 here, 867 here, 876 here. So they're a little bit going down, and they're always increasing their equity. 240 here, 388 here, 437 here, 487 here. So they're constantly increasing their equity, and the cash flow is basically the same. 422 only 1,000 in 2018, then 37 million, 168 million, and the free cash flow, it doesn't matter in the company that does not pay dividends that much, but still it's -7, then increased to 28 and increased to 159 million. Company is incredible from every single standpoint. I did my research. I am invested in this company. This is my second biggest position. Do your own research if you want to invest in this company as well. I love it so much, and I try to not love it so much because you cannot get emotionally attached to your investments. Okay, so many different things that I'm missing in the chat right now. So let's go through the chat really quick. Pete Griswold, make that April lot. I got fooled. April's fool. Love it. Any alt crypto news? Not too much crypto news right now, like everything is more or less kind of down. Major cryptocurrencies, Bitcoin, Ethereum, they're kind of relatively the same, like ±5%. Solana is obviously like down, like from 200 to 160, I think right now. So it's like 40, it's like 20% down approximately, okay? Cardano is down from almost $3 to $2.50, $2.40, so it's also down like 20%. Not a big deal. I got my 400% increase on Solana. I'm ready to withstand 20% decline. So 400%, I never expect Solana to be 400% up in 1 month. So I'm not at all ashamed of losing 20% the same like in 2 weeks. I knew that cryptocurrencies are extremely volatile. I do not have too much in Solana. I only invested like $250 in Solana. It's not the money that I'm afraid to lose just in case. So there's nothing significant happened right now, except that Cardano earlier this week, They finally launched smart contracts. Smart contracts is the same thing that Ethereum is doing, which basically eliminates the third party. In very basic understanding, and I know you already know it, Pete, Araya, and Gabriel, if you're watching, but maybe someone is new watching. Smart contract is, for example, if you're buying a house right now, you need to find a real estate agent, you need to find the seller, and then this real estate agent, it helps you and the seller, like it helps in the bank and all this kind of stuff. There's so many people collaborating just for one person to buy a house from another person. What smart contracts is doing is eliminates everyone except buyer and seller. So let's say, so I want to buy a house from you, Pete, let's say so, or from you, Mr. Araya. We do a smart contract which says, if I give you $1 million, then you give me house keys, and that's it. And if this condition, first condition, is met, if I transfer you $1 million and the blockchain confirms this transaction, then you have to give me your keys, because this is how smart contracts work. Very quick, very easy, no third party, no need for these bankers, real estate agents, nothing like this. Oversimplified example, but this is how smart contracts work. And Cardano launched smart contracts earlier this week. Very direct competition for Ethereum, basically. Okay. So Pete Griswold also says, no, tech isn't all changing in 1 to 2 years. CPUs are going to be way faster in 22, 23. That's why I did not upgrade. Yes, technology is exponentially increasing. If you remember, maybe like 20 years ago, the biggest USB cards were like what, like 100 megabytes, 500 megabytes, 512 megabytes. I mean, if you bought USB flash drive, which is like 1 gigabyte, it was like $100. I don't know, let's say, so it was incredible. Right now, you have this mini SD cards for your photo camera that are like 1 terabyte, and they're like $20. Technology is expanding exponentially, and every single year, speaking about Corsair once again, every single year Corsair is always in this top 5, top 10 of the RAMs and all this kind of other stuff. So Corsair is always staying relevant for like last 20 years, to say the least, at least. Okay, Pete says, well, you're not wrong. I mean, it's Corsair. Yes, Corsair is incredible. Do your own research. I love it. That's why it's my second biggest position. Okay, next company that I bought is Airbnb. Also a company that recently did IPO, and from the highest point all the way until September 7, I bought this company with almost 24% discount, as you can see it right here. From the moment I bought it, it is up, it is basically zero. It's like up 1% since I bought it. So it's not a big deal. Nothing significant changed since I bought it. But as you already maybe know, what is Airbnb? This is like, it's a replacement for hotels. Even we are going to Airbnb rental later in the beginning of October. So we are using Airbnb even in the times when there's like pandemic and all this kind of stuff. Before this, me and my family were traveling in 90% of the times we were traveling using Airbnbs. They're more convenient, they're easier, they're cleaner, they're bigger, and they're cheaper. So Airbnb was, in most of the cases, was our go-to option when we were traveling and wanted to stay somewhere. Plus we get to meet the host, a little bit of human interaction. This host was like more helpful, showing what's here, what's there. We can use like barbecues, or we can even rent the whole house for the price of one hotel room, for example, sometimes in some cases. So you all know Airbnb. It's been down, like I said, 24% since I bought it, which means it was 24% discount that I bought it. And once again, I'm just holding it. It's long-term play. As soon as there is no more pandemic, or as soon as people get used to it more, everyone is vaccinated, everyone is like vaccinating every year for all these booster shots and stuff like this, people will be back to traveling 100%. And Airbnb, I'm almost sure that's going to be here to stay for a very, very, very long time. I don't see any equivalents right now. If you want to go using hotel, you're using like Expedia, for example. If you want to Airbnb, you just use it Airbnb. You know, like for example, when you want to know something, you're like, I just Google it. Or like whenever your friend asks, so what is the S&P 500? And you can say him, just Google it. And the same thing here. Should we just rent a hotel or Airbnb? Airbnb became this verb for renting something other than hotel. This is why I'm so convinced in this as well. And the last one, oh no, this was the green lane renewables. I think I covered all my companies, okay? I covered Silvergate Capital, I covered Renewable Energy, ETF for Clean Energy, EOG Resources, Nordic American Tankers, Corsair, Airbnb, ARK ETF, ESG companies, and China Internet Etf. So I covered everything, what I bought last 2 weeks ago. And now, since we have some more time, let's go a little bit and check the Wealthsimple. So right now I'm gonna show only me, myself and I, because I'm gonna be logging in my Wealthsimple account. And in the meantime, type some interesting questions and I'll obviously reply to you in a while. Okay, so my two-factor authentication code for Wealthsimple is almost log in here, almost there, guys, almost there. And we're gonna be over like in 5-10 minutes. I'm almost done. I told everything I want to talk about. So just showing right now my portfolio. Once again, this week was a very red week. I think the S&P 500 is down. Let's even open it. S&P 500 is down like 1.3% in the last 5 days, basically since the markets opened on Monday 13, because as you already know, markets are not open on the weekends. And my portfolio during these times it doesn't show me because Wealthsimple is not that sophisticated. By the way, whenever I'm moving to Florida, I will have Charles Schwab investment account. It's going to be way more sophisticated, way better than Wealthsimple. It's going to show much more interesting things. It's going to be very functional. So right now, just apologize for not being that much sophisticated. Okay, so this Wealthsimple, it rounds up things a lot. But my portfolio, I'm being serious here, it's not 2% down. It's down like 1.2%. I think I can even open it here, but... So my main portfolio and my second portfolio is exactly the same. So in this week, it's down 1.8%, which is from this portfolio, it's like S&P 500 is down since what? Since Friday. Yes, since Friday it's down. I mean, since Monday it's down. Okay, it's not helpful. Whatever. So approximately my portfolio is down the same as S&P 500 because this one is down 1.8%, but this another portfolio where I only have 2 positions, it is down. It's not down 2%. The Wealthsimple is just fooling around. In the PC, in the desktop version, it shows me it's down 2%, but when I go to my phone, it shows me I'm up. So I have no idea what to trust. So if you combine these 2 portfolios, I am approximately the same as the S&P 500 performance of this week. And if you want to see it, once again, my how it's called, Silvergate Capital is down 4%, but I'm definitely buying more next month. My Airbnb is once again is approximately the same, like down 0.2%. My other companies which are in my TFSA tax-free portfolio are down. Apple is down 5%, very good, by the way. Maybe opportunity to buy next time. Everything will be down this week. Oh, and just when I said that everything will be down this week, AbbVie is up 0.2%. I think it's going to be the only position that's up during this week. Okay, AMCR, my dividend paying company, is down 3%, which means that the dividend yield is up 3%. Bank of Montreal is down 0.6%, almost zero. Caterpillar is finally under $200, is down 3.5%. Carnival Cruise Line is up. It's not bad. Carnival is up 0.6%. Corsair Gaming, my favorite, but it's down as always 0.17%, not a big deal. EOG Resources, this is the one which is definitely up 8.4%, incredible. Unfortunately, it's one of the smallest positions. Clean Energy ETF is down 2%. Intel, I forgot about that I have Intel, is up 0.7%, not bad. Chinese ETF, Internet ETF, is down 8%. Wow, not bad. Super cool because I'm gonna buy it more next month. Lockheed Martin is down 2%. Southwest Airlines is down 0.6%. 3M Company is down 2.8%. What was the last one? 3M? Yes, okay. So Nordic American Tankers is down 2.4%. This is the company that I only have $200, so not a big deal. Nucor is definitely down because commodities are correcting themselves, down 7.5%. Store Capital, we're almost there. Store Capital is down 2%, 2.6%. And the final one, the last one, the ESG ETF is down 1.8%. So this is my portfolio performance. From all the times it's up 18%, but once again it's not that sophisticated, so unfortunately it does not include or exclude deposits. It just shows like whatever I'm up or down, so it's not exactly correct, but it's pretty accurate. Okay, so it's not the best performance, it's approximately in line with the S&P 500 performance, but I have the luxury of selecting my very own companies, which I like selecting my own companies, and this is how it is. Okay, so couple of last words from Pete Griswold before I wrap this up. Best Airbnb is a no-COVID passport Airbnb. Sorry, but again they would be booked. LOL. I'm in the enemy now. Come on. We'll see. These passports, vaccinating, not vaccinating, like passports, we're gonna use them or not use them. Let's see how it's gonna be 5-10 years from now. Maybe these passports are gonna be only temporary for just like next year or two. Maybe then we're gonna forget about this at all completely. Maybe we will live with this virus forever. We're gonna see how it goes, but definitely people will adapt to this, like it's 100%. We will 100% not live in fear of the virus like 20-30 years from now. We will adapt. Passports, vaccinations, booster shots, like it will get better, so don't be afraid about it, don't worry about this. Okay, so this was the stream for today, for this Friday, for this week. Next week, as always, I'm gonna be scaring you about the stock market crashing. This is my favorite topic to talk about. Stock market is crashing, sell everything, just buy cash and everything like this. This is my favorite topics to talk about, because smart person, I'm not talking about me, like I'm not smart person in any ways or anything like this, but a fool will see something and he will never ask questions. A fool will see that Tesla only goes up and he's like, okay, Tesla will only go up. I don't want to think about it going down at all. So that's it, Tesla only goes up. But smart person always asks question. Smart person is always like, why Tesla is going up? Can it go down? Why it is so good? Why it's not so good? Why Bitcoin is so popular? Is there anything bad about cryptocurrencies? So smart people are the ones who are always asking questions. And I think I've seen even somewhere like some poll or some statistics or something like this, that more sophisticated investors are the ones who are always looking for what's gonna cause the next market crash. Whenever the markets are in bull, whenever markets are always going up, everyone, yes, of course, everyone is going to be optimistic and stuff like this. But once markets are getting close to their all-time highs, smart investors will be starting to question why markets are so high, what's gonna make them collapse, what's gonna be the event that will crash the stock market. They're always asking these questions. And once again, I'm not pretending to be like Warren Buffett, Ray Dalio or anything like this. I'm just a guy on the internet and all this kind of stuff, but I like to ask questions because this is lots of money involved, and this is, first of all, is interesting. It's so cool when you're trying to predict the stock market crash, and eventually if you're going to be correct, it's going to be just feeling cool. I was able to predict what caused the stock market crash in the future and when this will happen. I might be right, I might be wrong, we're going to see in the future, but just very good practice to be asking questions, which I'm also urging every single one of you to do. Always ask questions on the stock market. Never take things for granted. Never think the markets will always go up, even though you know the rule of investing, stocks only go up. But still, always question things. And this is going to be my message for today. I think I saw some more questions from Pete. Business is business, buddy, for sure. I wanted Ethereum to go down a lot of times, to buy more. We all want everything to go down so we can buy more. Follow the Pelosi's, they are never wrong, weirdly. If it's what's gonna help you to invest in very good positions, very good companies, this is what's gonna help you. Okay, so this was the stream for today. Thank you all so much for joining. Thank you so much, Mr. Araya. Thank you so much, Pete Griswold. I wish Gabriel, our third investing buddy, joined us, but it's way more than enough to see just two of you. It's a blessing, let's say so, to have some people watching me rambling about stuff for more than 1 hour every single Friday. So once again, thank you.